Let's go. That's right. We're going to be looking at Walmart earnings today. You see the stock is down just a little bit pre-market so far, 0.55%. Kind of wild stuff, all things considered. If you remember from my earnings reports to watch video, I mentioned I think analysts were expecting somewhere closer to 3% in terms of revenue growth, and mine was in the 5 to 7 range. I thought that'd be a pretty good EPS beat as well. So let's take a look at these earnings. Well, let's look at it. And would you look at that? Non-GAAP EPS of $1.34 beats by 15 cents, and a GAAP EPS of $1.80 beats by 60 cents. So a really good beat on EPS, like I thought. It's really good to see those numbers coming from this company, and a revenue of $134.71 billion, up 5.2% year over year. I'm just gonna tell you, as someone who's in the industry, maybe you should listen to me. Okay, beats by 3.18 million. Really good numbers there. It's a really good beat from these guys. And I think part of the reason why the stock isn't up, it's because it's moved so much. Year to date, typically this isn't a stock that does something like this. Year to date, the stock's up 28%. It's a really good year for this stock, and I don't think it's necessarily even fair enough. I think it should be up even further, if we're being 100% honest, because the company's doing a lot of things right. Walmart U.S. comp sales is up 6.4 versus a consensus of 3.9. Sam's Club up 11.1 versus a consensus of 8.4. These are really good numbers. Walmart U.S. e-commerce grew 79%. I thought it'd be just a little bit higher, but that's not. That's a really good number across all channels. That's really good stuff. I think the stock's not up just because, in my eyes, the investors were already baking in a beat. I think everyone knew this was going to be a beat against the analyst perspectives. I assumed everyone knew, because if you didn't, what have you been looking at lately? Clearly, Walmart's one of the premier stocks. Looking at a little bit more fine detail, it saw strength across key categories, including general merchandise, health and wellness, and food. Not a shocker there. This next quarter is going to be even bigger, by the way. This Q4 is going to be their biggest Q4 by far. The amount of stocking up and the hoarding going on again, it's begun. It's going to be a massive quarter coming up, so just be expected for that. Sam's Club e-commerce sales grew 41%. Membership income was 10.4% higher during the quarter. Really good numbers for even the Sam's Club portion of it. And you've seen a lot of that benefit, too, from Costco. Very similar company. So, consolidated gross profit rate increased 50 basis points during the quarter. The company says it incurred incremental costs related to COVID-19 of $600 million. Not unexpected. Again, that really contains all sort of sanitation, extra staffing, the extra, even the stupid stickers they got to stick on the floor now to say social distancing that no one obeys. But, yeah. Let's look at their earnings slides. I'm not going to go, they obviously have a lot of earnings slides. I'm not going to be too crazy as far as this is concerned, but we'll look at it. Still, no doubt. And see, look for anything good. Obviously, we talked about revenue there. Did want to bring in, obviously, operating income of $5.8 billion, up 22.5% year over year is really good. Effective tax rate rose as well, though, for them. But to see the operating income rise, pretty big. This balance sheet here, we'll obviously take a look at it as we get there. And operating cash flow, $22.9 billion they just added. Wowies. Pretty crazy. Up $8.3 billion year over year. That's really incredible. Capital expenditures also down even. They paid $4.6 billion in dividends. Pretty nice. Year to date, they've paid 4.6, I should say, and 1.5 billion of that was in Q3. Shares repurchased. They repurchased $1.2 billion worth of shares so far this year, 0.5 billion this last quarter, which is crazy because the stock was at all-time highs this last quarter and they still are buying it. And total shareholder return of $5.8 billion. $2 billion of that was in Q3. Really good stuff. From just the Walmart perspective, net sales of $88.4 billion. Up 6.2%. We saw e-commerce sales grow like wildfire. Strong traffic on Walmart.com. Marketplace and pickup and delivery sales up triple-digit percentages as I thought they would be. Walmart pickup, or online grocery pickup, is massive. It's going to be a massive category that continues to boost. It's just going to become a major part of their business soon. In my perspective, if you look at this and what this can offer, I would say it's going to be tough to say with a company like Walmart, but if you look more at a company like Target, let's say, I would say probably within 10 years, 50% of their business is going to be done probably through online pickup. I can't lie to you. Walmart is probably going to be a little bit different because their customer base is a little bit different, and it's a lot more expansive of a customer base. So it's going to be hard to say, but I know this will be a very big portion of their revenue come 5-10 years down the road. Comp sales up 6.4. Transactions were down 14.2. So the fact that they managed to grow the ticket price 24% as well to compensate for that is pretty incredible. People are buying a lot more, larger baskets, and they're not buying quite as often, but they're still buying a lot more. So it's pretty massive. Pretty massive stuff. Gross profit rate, we saw that. Operating income on the Walmart side of $4.6 billion. Grocery saw mid-single digit growth. Health and wellness saw high single digit, and general merchandise saw high single digit as well. Electronics doing well, toys, sporting goods, really good stuff. Walmart International was $29.6 billion, up 1.3%. Good to see them even growing. They typically don't do too much, honestly. So Walmart International, obviously include Walmex, saw 4.7% growth. China saw 0.9%, Canada saw 7.7%, and the UK actually saw a little bit of a decrease. Comp sales rose, but net sales growth decreased in them. Profit increased everywhere besides China. Operating expense rate increased everywhere besides the UK. Sam's Club brought in $15.8 billion, up 8.3%. They mentioned, obviously, tobacco negatively affected comp sales. A vast majority of the company is completely just banned selling tobacco. So, again, that is a pretty big portion of their business they've completely wiped out. Broad strength across categories, food and consumables being top. E-commerce sales growth of 41%, which is pretty massive. But curbside is going to be really the biggest portion of that. Really, a lot of people use their website. It's mostly just this curbside pickup that they are big fans of. So, really nice to see that. And membership income saw the highest quarterly increase in more than 5 years. New member count increased by 28%. That's pretty massive stuff. And you talk about the benefit of Sam's Club too, with the subscription-based model of having to be a member to shop. It's pretty massive when you think about the benefit that it actually can bring long term. Fresh freezer cooler was the high teens growth. Grocery and beverage was mid-teens. Consumables, low 20% growth. Home and apparel, low double-digit. Technology, which first off, I wanted to say the fact that home and apparel were growth. Obviously, apparel wasn't a massive part of it, but it kind of recovered this quarter. It was a super. Clothing got demolished earlier this year, but it's starting to make recovery. TEO, mid-single-digit growth, and health and wellness, high-teen growth as well. really good stuff as far as that's concerned. I think that's all I wanted to share on this. It was. So then we're going to finally look at the balance sheet as we love to do and see that, well, they give me 3 comparisons here, which is interesting. One 9-month, one year-over-year comparison. I'll do the 9-month comparison. Total current assets right now, $73.6 billion compares to $61.8. Total assets in general of $250 compares to $260 billion of 9 months ago. So there's pretty good improvement there. I'm hopeful that obviously liabilities doesn't quite increase as much. Total current liabilities of 88.1 increased from 77.7. But you see total current assets definitely rose by more than that. And overall, your long-term debt actually saw a decrease from 40.8 to 40, or from 43.7 to 40.8 most recently. So one very big thing, which I think is pretty good, stockholder equity rose to $87.5 billion versus $81.5 billion. So really good growth there on the balance sheet. I like what they're doing, and I think it's crazy to think at Walmart trading at a 24 PE ratio seems like crazy. Normally this thing's around 15 to 18. But this is a company that deserves, honestly, even a more steep valuation than this. I think this stock is still a heavy buy because these are sales that are going to continue for years to come. It's not like they're just going to lose these sales all of a sudden. No, these are people that when they impress them with their online grocery pickup, with their website, they're just going to continue to benefit from this, right? They're growing customers that will, good portion of them are still going to stay. I just like the numbers, and I think it's going to be super, super good. I like it. I like what they're doing. I think you should still buy Walmart stock at these levels. I'm happy this is my largest position, especially with Walmart Plus. I wish they would have kind of went into a little bit more detail as far as Walmart Plus is concerned. But Walmart Plus is going to be a massive winner for this company, and you just wait and see, because the subscription model they're bringing to Walmart now with all of their customers that they have available, it's going to be incredible. Hope you enjoyed this and you have a good one.